I'll send the markup of the minutes with that sort of stuff, okay?
We'll get to the minutes. So
Okay.
at this time, I'd like to call to order the audit committee meeting of the city of New York on February 15th. And I'll call upon the secretary to do a roll call.
Good morning, everyone. Our private members, Michael Spitzer, Chair.
Present.
Larry and Angelo.
Present.
Mark Kaplan.
Present.
Bud Larson.
Present.
Representing our public members, representing Mayor Eric Adams, we have Manhan Chung.
Present.
Representing Controller Brad Lander, Jacqueline Thompson.
Present.
And then just check. Okay, we have a quorum.
Okay, thank you. I just want to mention that in accordance with the mayor's executive order number 315, extending the state of emergency due to COVID to February 20th, we are meeting in a Zoom setting for this morning. And going forward, it depends upon what the mayor, if he renews the executive order or doesn't, we will make a determination as how to we meet going forward in the future. Also, at this time, I was informed that this is going to be Bud Larson's last meeting. And I would like to take this opportunity to recognize Bud for his contributions to the New York City Audit Committee. And for those that don't know, Bud worked for OMB for nearly 37 years and has served as a dedicated private committee member to this audit committee since his appointment in 2011. Over the years, Bud and I have worked on numerous projects for the city of New York. It has always been a pleasure to work with you, and we wish you all the best in the future, your future endeavors. Thank you, Bud.
Thank you, Mike. I happily second that as a motion.
Thank you. Okay, at this juncture, I'd like to turn the meeting over to the secretary for the nomination of the chair.
So we will be taking nominations for chair
I move the chairman
to be
continuously.
for Michael
Twice
Spitzer.
it's it.
With no relief at all. I second.
Okay, so this
Thank
is
you,
being
everyone.
determined. Michael Spitzer is the chair. I'll turn the meeting back over to the chair.
Okay, thank you. At this moment, I'd like to have a nomination for secretary. And I'd like to nominate Katrina Stauffer from the Controller's Office to be the secretary of the Audit Committee.
So moved.
Thank you.
Thank you.
Next item on the agenda is the adoption of the committee bylaws, which is in accordance with Article 4, Section 3 of the charter. Of our bylaws.
I think they looked okay.
So, I'll make the motion to adopt the committee's bylaws.
I'll second it.
Agreed.
Thank you. Motion to accept the minutes of the meeting, the audit committee meeting held January 25th, 2023. And I have a couple of edits Mark does, so we'll just send them to Katrina, mine and minor. So if everybody's agreed, if you have any comments, just forward them to Katrina.
I will indeed.
We have all received the.
I'll forward it to you.
Me too.
We have all received the annual report. And I'd like to have a motion to accept the annual report of the audit committee for the year that's ending February 28th, 2023. Do I have a motion?
Motion to accept.
Marion? Bud, thank you.
Wait a minute, I want to point out, if you forgive me, on page 3 of 12, it says motion was made for Mr. Spitzer to chair the committee, but unanimously voted the chair. Then we have a motion to nominate. We say the same thing, but we don't say it. same way, but all right, quit.
Okay, so just make that consistent, Kat. Okay, at this juncture, our administrative tasks are, now behind us. I'd like to call upon the New York City School Bus Umbrella Services Corp. Can you please identify who is here with you and who might be here from your auditing firm?
Oh, wait, Mike, before you get off this, forgive me, my pet peeve. The audit committee charter says we advise the city in connection with, that's page 10, and page 12 says we pick the auditors. And we keep going through this thing, but the audit committee shall select, I'm sorry, page 12. The latter is what applies, is that we pick the auditors. And somebody ought to not keep saying that that's our responsibility to advise. That's a significant difference.
Yeah, we should take the language exactly that's in the charter.
Yeah, I'll send the markup, but that's a substantive point.
Okay, but the charter details what our responsibility is regarding the auditors. So that language should be used.
No, okay. I'll send this all in. Okay.
All right, coming back to the New York City School Bus Umbrella Services. Cool.
Hello. So my name is Matt Berlin. I'm the CEO of New York City School Bus Umbrella Services, Nice Bus. I'm joined by our budget director, Angelo Mayo. It says AKAM, he's just waving. We've outsourced our financial operations to BTQ, and Surjit Sira is here, identified as Surjit. And then, like everybody, though no one, I don't know, we'll all probably introduce them as a different auditing firm. We think they're called CBIZ. Warren Ruppel and Phil Marciano, no strangers to this group, are here. They've done our outside audit. I think they have for other people. Nice Bus is. Would it make sense, Michael, for me to do a 45-second intro here?
Yes.
Yeah. So Nice Bus is a nonprofit school bus company. We were formed a little over like 2.5 years ago, but we really started operations. So we started operations in March of 21, but it really wasn't until November 1st, it might have been like October 30th of 21, when we acquired the assets of one of the New York City school bus operators, a company called Reliant. They did business, MV Transportation. They did business as Reliant here in New York City. So we acquired their assets. That was about 850 school buses. We hired their employees, and we've been running their school bus operations under a contract with the Department of Education since November 1st of 21. So this is our, we're about 15 months old or so. We're in our second year of operation. We have, when we took over, there were 5 depots. We've added a 6th, really a parking lot in South Staten Island. So we transport about 9,500 kids on currently 791 routes, about 1,700 employees, budget of $190 million. All the children are bused under contract with the city DOE, just like the other bus companies. And that's sort of, I can, as people who know me, I can go on and on, but I'll sort of pause in case there are questions.
First question I have is, do you have an audit committee?
We do not have an audit committee. Our board is active as the audit committee. So when we finished the audit, we had a COVID crisis, but we presented the audit at a board meeting. We had two people there, and then one of the members, actually PV Another, who's also known to everyone, was participating from home. So there is the board acted as the audit committee.
So, okay, and everything is outsourced? Or...
No, we have hired BTQ to do our financial management. So we have just 2 finance staff in house. And so the transition was pretty quick during the de Blasio administration. So it seemed to make a lot of sense. And there's lots of reasons to do this. I guess.
Got mail.
Some of it was mail. So there were lots of reasons to outsource financial management. One of them, frankly, was the high quality of work done by BTQ. But second, the transition was pretty rushed, and we weren't, frankly, sure when the transition would happen, just for reasons that are, doing a deal with the city of New York. So we were unable to hire. We didn't feel like it would be responsible to hire up a lot of staff before we knew that we would close. And so we sort of had to quickly be ready to go. And that's why we'd outsourced financial management, and our payroll processing is also outsourced. Everything else is inside.
Does anybody have any questions before we discuss the management letter?
Well,
Larry, Larry, go first.
Yeah,
Go
okay,
ahead.
so I'm a little confused, Matt. So, yeah, when I looked at your budget here, your audit, and, I see professional fees at 12 million and change, which is pretty big for an organization of your size, right? So I went down, I was directed in your package to note 1 to get an explanation for that. And then somehow it said professional services at 8 million and somehow mixed with pension costs. So if you could just clarify why, just what goes
Yeah, I
into
think
that
so.
12 billion?
Sirjit and Angelo jump in, but there was a significant bit of outsourcing that happened in the last fiscal year. When we acquired the company, we signed a management agreement with MV to continue to do the management of the bus company. And there was a payment so there's 2 things in there, maybe 3 things. So one of them is, maybe 4 things actually, so I think about it. So one of them is the fee paid to MV to continue to manage, right? Another way this is not uncommon when, not a mergers and acquisitions expert, but it's not uncommon when you acquire a company that you pay back a management fee to the prior management so they can continue to manage. So that's one component of that fee. There's a second component that might, and I'm not sure, and Sirjit can tell us, certainly there are a lot of professional fees around buying a bus company, right? Just legal fees and audit fees and sort of fees associated with that. There's a third, which is just so certainly we did outsource financial management. We had ongoing legal, HR outsourced. And then there could be a 4th in there. There were some fees paid to MV before the transaction that were sort of, because MV was kind of keeping the place warm, that were Nice Bus was directed to make, but were less related to running a bus company that may be preparing for a deal.
Okay. And so
how did I do? I'm getting some nodding from Angela, so I did okay.
So does that imply that come next year or the year after, the
Yes,
amount,
lower.
that will be lower and more in line with a company of that size?
Yes. So
Okay.
yes, exactly.
I think the use of the word professional before the word fees there tends to raise questions. I had the same kind of question, and I was thinking as a lawyer, my God, that must have been a field day. So I think you should find some other word to describe what you just did, because there's some of it certainly not professionals, as I understand professionals.
I had the same question, but I went and said it was 18 million over 2 years.
It's a big number.
I don't know if we now if we can edit the words on our financial statement, but I'm very happy to happy to change the label of the row.
At this point, it's just really going forward.
Okay.
Well,
Larian is exactly right that going forward, our fees to outside professionals will be, financial management, human resources. Human resources were already moving in. Obviously, there are ongoing legal costs of running a bus company. Some of our insurance is we have insurance brokers that are outside. I suppose we have professionals who do body work on buses, but they will be much more, as Larian described, in line with what you'd see.
Larry, and you have any more questions before Mark?
No, I'm okay with that. I don't know if, I know you'd like to edit it going forward, but I think if you could clarify what's said in note number 1, that would help, because I think it's going to strike a lot of people who look at it as, wow, that's a very large number for a company of your size. So if it's possible for you to?
I think we
to
did
alter them?
try to, and I'm a little bit, I think, so yes, we can, well, I guess we'll ask Warren and Phil whether we can amend that. We did try to, in our management's discussion, discuss the fact that some of the costs we have are related to running a bus company and some of them are related to buying a bus company. So we did at least try to explain to readers, to citizens of New York, that some of what we are all looking at in the fiscal year that ended June 30th, 2002 was related to a one-time activity around buying something. And that's
Well-
why we sort of, we
You have a-
tortured Warren and Phil with that torturous language.
You have in a footnote, I can't even find it here, but with the page, you say something like, say this, expenses incurred during the fiscal year were approximately 136 million and 6 million. Increase in expenses as a result of beginning transportation services. First of all, you're missing a verb. And secondly, is that what you're talking about in terms of numbers? Because one of them is 136 million and the other one's 6 million. And did that tie into the 9 million?
I'm not finding exactly where you are, but Surjit, you look like you or
Yeah,
someone might help.
On the general purpose financial statements that were shared, page 6 of the MDA analysis is what Matt was referring to. It sorts of breaks down our operating costs and non-operating costs. So non-operating is portion of that was about 8 million was the one-time initial cost that Matt made a reference to.
Well, how does that tie into what is on page 7 of the MD&A? There's a sentence that says there's $136 million beginning to operate. And you're missing a word anyhow. Several places on this page, you're missing words.
Surjit, are you able to tie that out? I'm sorry.
I'm looking at the 137, obviously is the total cost, the total funding received from DOE. 4 million is just a portion.
Well, I think Lauren and I have, and Mike have the same problem. That it's hard to figure out which number goes where. And you might want to think about that. And then you're missing words here grammatically. The sentences don't make sense.
We can definitely go back and revise.
The same
this.
thing is true in the second paragraph of page 9. Your total expenses. As the numbers don't. And then you have the concept here of liabilities. And one of your liabilities is unearned revenue. What does that mean?
So that's so unearned revenue is, if you're a school and students pay tuition and they can withdraw, that's revenue that you haven't earned, you haven't delivered the classes. Or in our case, if we get paid for school busing services we haven't delivered. God, I hope I'm doing my accounting right, Surjit and Phil and it is a liability. We haven't done the economic work of schlepping kids across Brooklyn, as they say.
So this liability is, you've been paid that, and that revenue shows up in cash.
Right. So we need exactly. So we need a credit for the debit to, we put the money in the bank.
Well,
And
I'm
we need
trying to
some sort of
understand.
credit, and it's not revenue yet because we haven't earned it.
No, I understand that,
Yeah.
but if I look at the balance sheet, you have
Right.
$21 million of unearned revenue. That's a liability. You should have cash someplace, which that reflects. You've been paid that money and you haven't earned it yet.
Right, but we might. Right. So we
Well,
do have. So it might not be an exact. Right. We could.
Mark-
One could
Mark.
use that. Right.
Mark.
Someone want to jump in on the
Stop.
accounting, or I can?
Mark, some of it could be in the prepaid expenses.
Yeah, that's what I was
They
gonna
get money
say.
in, and they're flipping it to the contractors.
I understand. It just seems to me if you read it, somebody ought to. It'd be better if it was clearer.
Mhm.
And you got some other little things here. If you want to clean up the grammar.
Okay.
I think that's it.
Are there any other questions about the financials?
Oh, wait, sorry, Mike, one more. There's a reference here to issuance of lease financing at $7 million. So
Just
other
trying to
finance,
find that reference.
That's related to GASB 87, the lease standard for their leases of their operating sites, the 5 operating sites that Matt spoke about earlier. That's the conversion from modified accrual to the full accrual to pick up the lease liability on the full accrual.
okay, I got it.
Okay.
Then it's a statement in here that you acquired service vehicles and buses valued at, how are these valued? I'm just curious.
So these were valued by, so the terms of the deal, I mean, so we sort of came in once a valuation was done. So I was hired after a term sheet and a price had been negotiated by really the city of New York. So I mean, obviously we in fact, quite literally looked at the vehicles. But in fact, the valuation was done by the folks who struck the deal, none of whom are here.
Well, the only comment I have is you have a footnote in the financial statements that says the buses is valued at, and you don't indicate how that was done. So you didn't.
Right, because we're just making the statement they were valued. The valuation happened, and there was a
No,
number.
I understand that. But if you sat down with Mark Kaplan and negotiated a deal with buses, and I said it's worth $16 billion, as distinguished from you got somebody who values buses all the time, would be different. Seems to me that
Yeah, Mark, it's really not, the assets that were acquired were really the buses, and there's 2 components. There was a small cash transfer, but there was also the taking over the portion of the unfunded pension liability that related to the bus drivers. So that was about $12 million and change. So that was that kind of guided the.
No, but this says the buses were valued at approximately $16 million. So somebody did it, valued them, and the financial statements don't tell you how or who. Is there an expert?
No, I'm saying they're valued at the cost that was paid by New York City Bus.
So if New York City Bus paid 10 million, it would have been 10 million, but because it paid 60. So that's the negotiated price. Is that it?
Basically, yeah.
Well, that's certainly not valued that way.
We could use a better term for that.
No, I think
I also wanted to comment, maybe I should put while we're ahead, but just going back to the professional fees, the first year, 2021, there was no audit required for the organization because the assets were low. So that kind of was, but they are a nonprofit organization, so they do file a 990. So some of the terminology and classification of expenses were driven by the tax form. So it's a good comment. I think we'll work with them next year to split out any kind of unusual type expenses or non-pure professional fees onto its own line.
Okay, then let me be gone as long as I'm doing this to you. On page 18, you say resources that are not constrained, and then you say both restricted and unrestricted. What's the difference between constrained and unrestricted? Or why both?
Because you have a difference in the fund balance classifications. The assigned and the committed and the unassigned would deal with constraints, whereas restricted fund balance versus non-spendable would be more of a restricted item. It's just the terminology on the gap. That's all that means.
Okay. To the extent you want comments about making these things better, a little bit more grammatical with the its and the nots. Now, here's a substantive one. Cash exceeding the credit limit, the insured limits. Why, with about $8 million sitting in the banks, don't you have it collateralized? Everybody else does.
So we do now. We did not, frankly, simply because there was so much going on, we didn't do it.
So
There's a deficiency that we'd identified, and we have fixed that.
okay, well, it'd be nice if I were you to try to indicate that, so somebody like me doesn't see and ask the question.
Mark, it wasn't done until after the financials were issued, so.
Right.
That's why. That's
Well,
why
you can have a posted. All right. All right, so it wasn't done.
And there's a management letter comment about that.
Okay, I will, if somebody wants the other nits and bits, just tell me who, and I'll send him or her.
That'd be great. If you could send those to me, that would be.
Send me
And I'm
your
sure-
email, send me your address by an email, and I'll put it in the mail to you.
I can coordinate that, Mark. I'll send. Mark.
Terrific.
Mhm.
Katrina, thank you so much.
No problem.
And if you have any questions about my squiggles, let me know.
No, that'll be great. Thank you.
Yeah, you'll draw it in a long list about his squiggles.
I'm
You
sorry.
can design bus routes, Mark, if you're looking for a later career. That's what we're
Listen,
familiar with Snickles.
I used to run a fairly sizable investment bank. And when you run one of those things and you own, and you're a general partnership, you watch this very carefully.
It is as one should when one is it's a lot of money that goes through Nice Bus.
Yep,
All right. If there's
so
no,
I got trained. Okay.
if there's no more questions and comments about the financials, I'd like to open it up to anybody have any comments or questions regarding the management letters.
Okay.
One of the questions I have is in all the expenses that were not properly accrued at year end. Does anybody know what the dollar value of those were approximately?
Surjit, do you want to? Or Phil, do you want to?
Looking.
I would have to look up the journal entry.
So it is mostly one large expense.
Was.
So all of this was one expense that
So
wasn't.
mostly it's one large expense. So, we had some spirited discussion with our auditors about this. There were, and Surjit, correct me if I'm wrong, so my memory might be incorrect here. There was one large expense that we had a reason that wasn't accrued. And then we had others that weren't accrued so look, we acknowledge this and we know we have to adjust this. Some of what happened here is we were new to running a bus company. And so there were things that we did not know. And then we had this kind of crazy arrangement with MV where they were managing things and getting us financial information on unusual schedules. So some of this is due to the newness of the company and not seeing how expenses flow. And then there was trying to give Surjit time as she finds there was one large item. And I haven't seen her smile yet to say that she's found
I'm
it.
looking
So
up the journal entry.
I have to keep
Surjit,
stalling.
I have it if you want me.
Yeah,
Go ahead,
if you
Phil.
have it handy, if you can mention the amount.
There was approximately 550,000 in a pension accrual that wasn't made. That was one of the adjustments. And then there were just various others for around 250,000.
So roughly $800,000.
Yeah, right.
And just to add to like what Matt was saying, especially like for the smaller items, we were being proactive before the end of the fiscal year in reaching out to the vendors that we inherited from MV. But as you may imagine, as much as during the year-end close, as much as we were trying to accrue for most of those things, there were some vendors that were still giving out, who were still handing out invoices, despite best efforts to reach out to them.
You must have an inventory of parts and things to repair the buses, am I right? Who's responsible for the
I
upkeep?
can't find the dot there. Yes, so we do have an inventory of parts to repair the buses. So we have a bus company has a, I'm sure just like Stephen and Brooke have an inventory of cleaning supplies and have a system. We've got a fleet management system that maintains our inventory of supplies and parts. We do try to have a roughly, a just-in-time-ish inventory system. So we don't keep a lot in stock, but we do keep some.
So you had a physical count of the inventory at year end, right?
So we did not do a physical count of inventory at the end of 22, I don't think, Phil and Warren.
No, because your inventory is really kept on a just-in-time basis. What you have in stock is really repairs and maintenance type costs that are expensed when they're brought in. You don't per se have an inventory just kind of kept of all major parts on site. And Mark, we did do a site visit, and we did actually do more of an inventory and account of the buses rather than the actual parts, because it was so minimal compared to the bus cost.
Oh, I'm surprised because I used to be a director of a truck renting company. The inventory there.
Well, I think now when you go to order parts, you get them pretty much within a couple of hours. So there's almost no reason for them to keep a
different game.
Yeah.
Okay. Someday over a drink, I can tell you a story how that inventory worked.
Sounds good. Give me a call.
There's no other comments or questions. I'd like to thank you for coming.
I do have a question. Sorry, Mike.
Okay. Wes.
Good morning, everyone. Bill, you said a couple hours you could get replacement parts even during the pandemic with a lot of distribution issues.
I mean, during the time that they were operating, there was not too many in terms of closures and things of that nature. So yeah, I would say so in the period that we're auditing.
Oh, well, that's amazing. Thank you.
The biggest concern I have is how when you have an inventory of parts and things for vehicles, they have a wonderful way of disappearing.
So we obviously have that concern too, Mark, and
I'm sure
it's why we secure things. I mean, one of our other kind of natural advantages is, and that's certainly more of an issue in the automotive world, is that not a lot of the people who work here also have a school bus at home that they're repairing. So it is helpful that many of our parts are less useful for someone unless they're running a school. But you're exactly right. That is obviously a constant concern in a place like that, and it's why we like it's why the industry has moved, Wesley, to a situation where you call an auto parts shop, and a battery or tires arrives in an hour or two.
Wow, what a change then. Okay, thank you.
It is a great world we live in.
All right, if there's no other issues, comments, or questions regarding the financials and management letter, I'd like to thank you for coming today and presenting to the audit committee, and good luck going forward.
Yeah.
See you in 12 months.
I'll send this on to whoever wants it.
Great, thank you.
The next item on the agenda is the New York City School Support Services.
Mike, I just want to state for the record that our public advocate representative, Wesley Paisley, is in attendance.
Oh, thanks. I knew that already.
I just wanted to state for the record.
No, that's good for the minutes.
Yep.
Good morning. So I'm Brooke Jenkins Lewis, CFO of NYSIS, or New York City School Support Services. I'm also joined with Stephen Brennan, who's our executive director. So we can jump in if you want us to give us a little snapshot of who we are. I know that we've been doing this for several years.
Yes, please.
Want to jump right in? Okay. So we are New York City School Support Services. We provide the custodial helpers for the New York City Public Schools. We employ, depending on the time of year, roughly 6,500 to 7,500 employees, anywhere from the cleaners, handy persons, to the fire people, station engineers, and high pressure engineers in the schools.
I don't know.
That's
If,
Go ahead.
if you were talking, but I didn't hear. It was like you froze for a moment.
Can you guys hear me?
Yes, now.
Go ahead, Stephen.
No, Brooke, go ahead. Finish it. Repeat it again for them, please.
Okay. So we are New York City School Support Services. We provide all the custodial helpers for the New York City Public Schools. We employ anywhere between 6,500 to 7,500 employees and pay them on a biweekly basis. We employ the cleaners, handy people, station engineers, fire people across 2 unions, Local 32 BJ and Local 94. That's basically what we do. We work alongside or with the New York City Department of Education with the custodial engineers who manage our employees to keep the schools clean and safe.
A question, like, so the custodians, are they employed by your firm or
No,
still?
No, they are not.
Contractors.
no,
They-
they are employees of New York. Only our employees are the custodial helpers that they manage to clean the schools.
So you provide the staff for them to run this, manage and run the school.
Yes.
There used to be a big problem with the
Mhm.
custodians. I'd be interested to hear whether that's ever been dealt with effectively. But you're not involved with that, huh?
The custodian engineers are direct employees of the city of New York. I'll let John Shea come in on this to tell you from his standpoint of how they manage that. John?
Sure. Thank you, Stephen. For the group, I am John Shea, CEO of School Facilities for the New York City Department of Education. For those of you on the call who do not know the genesis of NYSIS in 2016 at the direction of the de Blasio administration, they asked us to put together a plan to get away from what was known as the old indirect systems, where custodian engineers had wide latitude for hiring and budgets, and consolidate all of that and centralize it in order to create efficiencies and better controls over the system to address some of the problems that you've alluded to, which did exist. And we did that. NYSIS has been, from the Department of Education's perspective, overwhelmingly successful in doing all of those things. The custodian engineers are still DOE employees, but they no longer have personal financial responsibility over their assignments. Those budgets are centralized. We now have the ability to move custodial helpers between and among buildings. We now have a centralized hiring and HR system that manages all of those folks in one place and creates the business controls that had been lacking in the past. And we as the department have nothing but great things to say about how NYSIS has been able to support us and move that system forward and get away from some of those issues that no longer exist.
Well, I'm very pleased to hear that, because when I was on the audit committee of the Board of Ed, we used to hear stories that were very disquieting.
Absolutely. And, we did make some progress before NYSIS in getting away from that, but NYSIS really has been the key to getting completely away from all of that.
I think many kudos for that.
Appreciate that. Thank you.
Because I spent a lot of time in a prior life dealing.
I
Wow.
spent a lot of time in my current life dealing with that. So personally, I'm a happy
sure.
guy.
I'm sure.
All right. Anybody else have any comments or questions regarding the financials?
Give me one.
Oh, I'm sorry. Okay. I suspect this is going to be a question for a lot of agencies as we come out of COVID and go into more normal running procedures. But I'm looking at your line for salaries and employee benefits. And there's a very large increase between 2021 and 2022. And I went back to look at 2019 to see what it was before all of the COVID problems. And it was 637 million. So I'm still seeing a large increase in salaries and employees, et cetera. Could you just explain what happened?
Yeah, so there's a couple things attributed to that. So the first one is the opening and closing of schools. So when we had lockdown, so to speak, we essentially went down to essential staff. So a lot of the staff that you would have to do permits or the extra work or things like that essentially went down to the essentials. So went down to more basic staff. So that's why you saw from 19, which you saw was 637, it went down to 620 in 2020, which reflects that.
Yeah.
In 2021 and 2022, you had an uptick in overtime. Aside from your incremental union increases, you had an uptick in overtime to do COVID cleaning, as well as we faced what a lot of businesses faced was being short-staffed and getting staff in. So there's a lot of overtime in that as well. So it's the biggest one is going from, reduced staff or just essential staff to then full staff with the schools going, the addition for COVID cleaning, as well as the addition for overtime for being short-staffed in some places.
And what proportion of that increase was overtime? Do you know?
I would have to go. I don't have it in front of me. I would have to. I can work with Katrina and get you guys the information for that. I know it was talked in one of our board meetings. So I could also look at one of those minutes too. To reflect that.
Okay. Thank you.
Thanks. Quick question. Do you have an audit committee?
Yes, we do.
Okay. Mark?
If you look at your footnote, I don't know what's on page 16, it's property and equipment is stated cost less depreciate. As far as I know, property doesn't depreciate. If you're talking about real property.
We don't own or have any real property, so I think it's items outside of real property.
Well, it's odd because usually when you see the word property, you don't see depreciation, and you have that attached to depreciation.
We could probably look next year to remove the policy note altogether since they don't own any PPE or fixed
Okay,
assets.
well, you might look at that and there's some other bits and pieces here. One of the, let me just get the substantive one is distinguished from grammar. Oh, you have a lot of money held in money market funds, according to this. And you talk about level 1, quoted prices. Funds typically have net asset values, if that's the kind of fund you're talking about. And that's what you use, the published net asset values of funds. So, and particularly money market funds. So it doesn't, you might want to look at that. And then, well, the rest is trivial. If you want some stuff to help you fuss, if you turn to the pension plan.
What page, Mark?
Page 23, there is a deferred outflow of resources. Is the net difference between projected and actual earnings is $25 million. So I guess I'm not an accountant enough to understand whether that's a good number, whether that's good or bad to have such a big number.
Well, more so an actuarial adjusted fluctuation. It's not really something that NICES comes up with. It has to do with their measurement under GASB 68. It really just has to do with the changes in the asset value in the pension plan versus what the liability would be and the smoothing effects of that. The amortization for that shown right under it in the table below.
Yep.
So I don't know if it in a good or bad, Mark. It just is an accounting mechanism, really, to be honest with you.
Okay. My problem with all this stuff with the pension plans is when you look at the rates of return, the expected rates of return, and the idea that we're going to earn these funds are all going to earn 7%, there's a kind of difference.
Right.
And nobody, the financial statements don't point that out.
Yeah. Also, keep in mind the measurement date for these is 1 year. It's a 1 year lag to the financial.
I listen. You put it. If you done it last year, it would look terrible.
Right. No, I know. I understand.
All right. Oh, wait. Yet on page 25, you refer to the CEO of the plan. Is there such a person?
That would be for local 94. I asked either Stephen or Brooke probably would know better of the union themselves.
Well, I don't think the fund that the plans typically don't have a CEO.
It's possible. We can look into the language of it.
Yeah.
Based on the valuation.
All right. Well, and then the last one is only a plea for a nearsighted guy. The figures on the back pages get so small. You need a magnifying lens to see them.
Agreed. The more years we add, the harder it is to read. We'll try and flip it and make it a little bigger next year.
All right. If you want my scratches, you can just tell me who to send it to.
Send it to Katrina and
I'll send everything to Katrina.
Yep,
Thanks.
send me everything and then I'll coordinate Mark, sorry.
I just have one more question. I'm sorry if I can go back to you guys. So the sort of extraordinary growth rate in terms of paying for staffing is a result of overtime, and as it probably is in most agencies. Is your staffing level back up to where it was, and what's your vacancy rate?
So our staffing level is pretty close to what it was. I mean, we do have vacancies. That's another thing. I'd have to look at what our current vacancy rate is, but it right now it's more going back to pre-COVID times as far as the turnover rate and the vacancies that we've got. We don't have nearly as much as we used to.
So then next year we can expect a more reasonable level of funding.
Yes, and another thing to note in all of this is there's usually, different years, there's different initiatives. So we had like the lead remediation initiative where there was a bunch of overtime resulting to that. If we've got a year that's got a lot of snow, and snow removal, there's a lot of overtime associated with that. So there are some things that are, depends on weather, things that are not predictable. And there are things like COVID, for example, and the extra cleaning is not what it was in 21 and the beginning of 22. So yes, it should go back to more normal, but we also have, union increases that happen on a regular basis as well. Not that it explains all of it, but there will be an increase every year as a result of that.
Did you organize the weather this year so we wouldn't have any snow?
I wish. I'm originally from California, so I'm loving not having snow. So.
Okay, thank you.
All right. I'd like to thank you for coming today and presenting your financial statements. There is no management letter, so see you next year.
Thank you very much.
Bye then.
All right, the next item on the agenda is the New York City Educational Construction Fund.
Good morning. How are we? Hi, I'm Jennifer Maldonado, the CEO of the Educational Construction Fund. I believe joining me today is our CFO, Cynthia Wong, and members of our accounting audit team, Warren Ruppel, Dan McClew, Phil Murciano from Marks Pandith, CBIZ. And with that, I will kick it off. So as you all know, the New York City Educational Construction Fund is a state public authority tasked with building DOE schools through mixed-use public partnerships. We currently have 16 properties that we manage, a new property that's under construction, and numerous others that are under consideration. So with regard to our financial statements for fiscal year 2022, the fund generated a net operating income of $17.8 million. That's compared to $15.3 million in fiscal year 2021. That is due to the restated GASB 87 provisions that the auditors can speak about in more detail if there's questions. The fund's rental income and tax equivalency payments from its existing 16 properties grew to approximately $36.5 million in fiscal year 2022, compared to $35 million in fiscal year 2021, as also restated due to GASB 87. In terms of our construction activities, our project at 80 Flatbush is on track for school opening in fall of 2024. The project includes the first passive house schools in New York City, which are state-of-the-art heating technology for the schools, as well as the city's first all-electric residential high-rise. Other activities, we have been working with cities HPD and OMB to extend the lease of one of our properties in West Harlem to 99 years of a lease. We continue to receive ground lease payments for that lease, and the tenant, through the obligations of the agreement, will convert over 500 apartments in the building into affordable units. The fund has restarted its co-op tech project in East Harlem, which had been stalled by litigation and COVID for approximately 5+ years. The project includes 3 schools, the restoration of a large playground in East Harlem, and a residential tower. We're currently under review with OMB and hope to get that project up and running by the end of this year. And CF continues to undergo analysis of potential new development sites throughout the city. And with that, I will take questions, or I will actually turn it over to the team at Marks Pan at CBIZ for any statements, comments that they have as well. Warren?
Yeah, no, thanks, Jennifer. As was mentioned, I never really introduced Phil Marciano. He kind of he's a fellow partner at Meyer Hoffman McCann, as we're called now. And, I'm introducing him to some of these accounts, so he's familiar with them back on the line. So he handled school support services and the bus company pretty much directly with some partner supervision for me. So, but Dan McElwee has been a manager on ECF and also SCA. And we, there's really no GASB 87 was the big implementation issue, which I'm sure this committee has heard a lot about in terms of the city's implementation. So it added a significant piece of receivable onto the financial statements. And other than that, there's really just kind of the typical ECF financials. That 87 was really the biggest change.
So I'm waiting for the squiggles. I'm waiting for squiggles.
Anybody have any questions or comments?
Forgive me again, Mike, but there's a payment to the developer of $10 million, a nice round sum. How was that arrived at?
That was arrived at, that was something that was implemented or adjusted in 2021. And that's due to a loss of zoning opportunity through the Euler process, and having to meet the obligation of the entirety of the school floor plan, we adjusted our payments to the developer and added an additional $10 million. We had actually created the program and thought that we would achieve more zoning opportunity through the Euler process. That did not occur. So in order to meet the obligations for the schools, which is what our main concern is, we had to make an additional contribution of $10 million.
And how was that sum arrived at? It's a nice round sum,
yeah,
and it looks funny.
Yeah, no, it's arrived at through the square footage that had again been initially contemplated for the school. I believe we had a lot of about 20,000 square feet, and that was computed through the square footage construction costs to achieve to get to $10 million. So
if I were you, I would look at putting some meat behind those bones, because from the standpoint of some person who looks at city payments, a nice round $10 million bonus, it looks like.
Well, it's really not a bonus. It's really to be able to meet the obligations of completing the school. There is no bonus per se. The school was anticipated to be 150,000 square feet. Through the zoning ULIP approval, we were only able to achieve 130,000 square feet. So we were not going to lose square footage for the school. So we had to make it up in that way. So it's really, there is no bonus per se. It's really just to meet the obligation. But if you feel like more clarity is needed, we're happy.
It's not more clarity. It seems to me people look at financial statements of segments of the city and try to look for places where it looks a little slippery, and a $10 billion number with nothing attached to it other than to a developer. If I were signing it as a trusted director, maybe I'd want more to support the payment that I authorized.
Happy to include that going forward. Happy to include that.
I just think okay.
For me, we will do that. We will clarify that and add more.
Now, on the next page, you have investment income and loss. So you have capital projects have a $50 million, $1 million investment loss, and debt service had a $255 million gain. What is that?
I am not sure exactly. Cynthia, can you step in here?
Yeah, can you tell me what page you're on?
Sure, I think it's 20. Yeah. If you look at revenues, it has investment income, paren loss. And the debt service fund had income of 255 million, and the capital projects had a loss of 55. Big numbers, and it's not explained.
I see what you're saying.
Now, maybe I'm wrong because it's not zeros. It's only $255,000, but it's still a big swing there, and it doesn't.
Let's see. I'm trying to find it. If our auditors can step in here while I'm trying to figure out.
Yeah, Mark, you're only talking about the investment.
I'm looking at page 20.
Page 20. Page 20.
There's revenue and investment income and loss.
Right.
And the capital projects lost 55,000, and debt service made almost a little over $250,000.
Yeah, if you look at the MD&A on page 5, there is an explanation for the fluctuation in the investment income. So it really relates. Most of this, actually, the investments are carried at amortized cost because they're short term. But there was 1 or 2 bonds that were carried at fair value, and the fair values of those bonds decreased because of the increase in the interest rates from when they were purchased through June 30th. So that we actually specifically added a comment in there at the bottom of page 5 to kind of address that.
All right.
I see that. Yep. It is explained at the end of the last two paragraphs on page 5. The explanation is given there in terms of the fair value adjustment.
Okay, if you say so. Mike, I don't think I have
Okay.
one more thing now.
Larry and Bud.
Oh, yes, yeah.
Yeah,
That's-
actually, I have a question. So this 5-year plan is 19.7 billion. Are you behind in the plan? I mean, you must be, right? Because you were basically shut down in construction for what, 18 months or something. So have you fallen behind in your plan?
What page are you looking at?
No, I'm not looking at a page. I mean, I'm simply asking you, I think on your first page,
yep,
you talked about how much the plan is, 19.7, how many schools you did one year, how many you did the other, how many completed.
Yep.
And I'm just wondering, given, again, that this was COVID for 18 months and you couldn't have done much work, did you fall behind in your plan? And if so, about how much?
I mean, we didn't fall down. We didn't fall in our plan monetarily. We fell backwards in terms of time and time to meet our construction goals. That's really where we saw any real loss. It's more in time, less it is in revenues.
Okay, I'm a little confused by that. So are you saying is the way it works, you make a contract with the contractor to come and build an addition, and and you assume that the addition would be done, I'm making up 2021, and everything's closed down because of COVID.
Mm-hmm.
That allocation remains in the plan, but that addition is not made until much later.
Right. We really don't work that way. We don't do additions per se. Our project at 80 Flatbush, which is the one that was held up, we were anticipating being able to open in 2022. It moved. We had to have a target date now of 2024. So it's more of an issue of we had to move the construction timeline. But in terms of dollars, we really didn't see, or we have not seen a real change in the dollar amounts that were allocated for the project. That's a static number.
No, I get you. The amount allocated in the 5-year plan for each project is what's allocated.
We're separate from the New York City School Construction Authority. So we are operating outside of the 5-year plan. The 5-year plan is separate from our organization.
Okay. All right. Gotcha.
Okay. I have a couple more questions. If you go over to page 30 and 31, this is custodial credit risk. And it's a risk that you can't get the collateral security in possession of an outside agency. I don't know what agency means, but all deposits and investments are registered and held by the fund's agent in the fund's name. Now, those securities which you loan are collateralized by something, the fair value of it, but they're not registered in your name anymore once you lend them. So what are we talking about here? In the event of a depository incident, that's cash, but if you probably are lending securities, or are you? And unable to recover deposits or recover collateral securities outside end. Are we talking about cash? And that's
all of our investments are treasury bills, or and then the only thing we have is a bank account with Chase, and that is collateralized by Chase. And then we have a money market account. So I'm just
money market fund, those are money market funds.
Yes, and they're only the safest government securities.
And they are in your name?
Right.
Yes. So we have Some of our construction funds are in money market accounts and which are accessible to us at any time. And if we ever need to make a payment, the money is withdrawn that day.
Okay. Well, let's move over then to the next page, which says that you have $50 million in cash. And $115 million in treasuries. Then you have U.S. government securities. Are you equating U.S. governments with treasuries, or you're talking about different things?
We only have. Sorry, we only have.
I'm sorry. I'll shut up, please.
No. We only invest in U.S. treasuries, so. We don't.
Well, if you look at the chart on the page, it says U.S. government securities, and then you have U.S. treasuries. I don't know what the difference is, but if you only do that, something is wrong here, because you have a carrying value of 115 billion, and then you say treasury securities are 76. So if you only invest in U.S. securities, where does that other difference between the two numbers come in?
Are you okay? So are we on the page 31?
Uh-huh.
And then
you have $50 million in cash.
Okay, and then you're talking about that second line, U.S. government agency obligations?
Well, I'm looking at it says $115 million carrying value of government securities. Then you down a couple of paragraphs, the fund had $72 million of treasury securities. And you're drawing a distinction between various kinds of federal securities and treasury securities, and how does it fit with $115 million?
So Cynthia, that's like I mentioned before, the majority of the securities are short term, so they're carried at amortized cost. So that carrying value is reflective of the majority of that at amortized cost, but included in there, only 76.2 million of that 115 million is actually being carried at fair value. So that's the only amount that's being segregated in the hierarchy disclosure below, because the rest of it's at cost.
Well, but you're using the word U.S. Treasury securities below and U.S. government securities above. Are you drawing a distinction, or that's just
the same thing?
Same thing. Okay. And U.S. government agency securities, same thing?
I just looked at, it's one federal home loan bank note.
Okay. And the cash is in a bank, or what?
Correct. It's in a bank. It's with Chase. Correct.
And it's collateralized and in your name?
Correct.
You might want to say that.
Okay.
I mean, everybody else does.
Okay.
It's on the prior page.
Is it? I thought so. Okay.
It's in this paragraph.
Yeah, it is, but it does no cross reference. Okay.
Do you feel like that's not clear of the way
that the big numbers there, so as clear as you can get is better. That's all. We use the same words.
Okay.
Okay. One form possibility here.
Yep. Yeah. I see what you're saying.
Irene, did you raise your hand like a question?
No, I didn't. I just shook my head.
Now, there's another thing in here that on page 44, it talks about additional residences may receive shelter rent adjustments. What is this? What does that mean?
That is HPD, I believe, or HDC categorization for lower income housing. That was, I believe, used in the 1970s, and it's within the agreements that this terminology of shelter rent is still used, but it is a funding mechanism for affordable housing.
I see. Okay.
I think it's a term of art that's no longer used, but as it's within all of our.
Yeah, because I sit on the audit committee of the Housing Authority. I haven't seen that.
this was something from the 1970s. It's only in 1 or 2 of our properties where we see it, and those were constructed in the 1970s.
Okay. I'll send this one and you can pick up my nits.
Squiggles, yes.
Squiggles.
The new form of art. Mark.
Squiggles.
I've driven a bunch of junior lawyers at every firm I've been at. Crazy.
Oh,
I've written on my notes, squiggles and nits on my notes.
you did that to us also when we were putting together the city's financials.
What I look forward to each year. So.
If there are no other questions or comments, I'd like to thank you for coming and presenting this morning. And
Thank you.
See you next year.
Hopefully in person.
Yeah.
Wouldn't that be nice?
Thank you.
Have a good day.
You too. The next item on the agenda is the New York City School Construction Authority.
Good morning.
Whoops. I get a block of white, but no person. Let me see if I can fix that up.
Marion,
there you are.
Can you just identify who's with you?
Yes, absolutely. So, hi, I'm Marianne Egri, the Vice President of Finance and Human Resources at the New York City School Construction Authority. Nice to see all of you again. I was hoping we would be in person, but anyhow, with me is Ewen Wang, the Director of Accounting. And then also our auditors, who are now known as Mayer Hoffman McCann CPAs. You know them as Warren Ruppel and Dan McElwee, formerly Marks Paneth. So yeah, that's who's with us today. Just, you know, my usual brief overview is fiscal year 2022 was the 3rd year of our 7th 5-year plan. And that number right now totals $20.1 billion. In 2022, we committed $4.37 billion. And we awarded construction contracts for 40 new schools with a construction value of $1 billion. And we awarded construction contracts for 404 capital improvement projects with a construction value of $1.7 billion. In September of 2022, we opened 35 new schools and we added 8,863 seats to the school system. Right now, there are 73 capacity projects in construction and 754 capital improvement projects in construction, and we are on track to open 25 new schools in September, which will add over 6,500 seats to the school system. So that's what I have, and then I would like to open it up to you.
Okay, thank you. Does anybody have any questions or comments about the financials? Larry?
Okay, so obviously the question I should have, I mistakenly asked of the other construction authority. I should have asked from you. Did you not fall behind in your plan, just given the fact that, you know, construction wasn't happening for a year or whatever it was, 18 months?
Right. So we did fall a little behind. We have been able to make it up. So some of the opening dates on the capacity projects were moved out. But they're still, you know, we were pretty much able to make it up. So yes, you know, there was a slowdown, obviously, because everything was totally stopped. And then we had a gradual reopening, you know, which was prioritized based on urgent need. So the capacity projects were the ones that, you know, were allowed to start moving first. So yeah, there definitely was a delay, but we're making it up.
And so you think by the end of the 5-year plan, you'll basically be on track?
yes.
More or less,
Having
yeah.
said that, yes, having said that, I mean, I think you're aware that the city did have, because of the economic situation, they did push some dollars into out years. So hang on, I sort of lost. Is
Okay,
everybody?
I can see you, Marion, so just, okay. So,
I just see a blank Zoom screen. Okay, so
so the city did a push of funding. Is that
yeah,
what
there
you're
was a
saying?
push of funding. So there, but those were primarily for what we ended up pushing were primarily things that were not cited anyhow. So it
Anyhow,
wasn't,
okay.
an immediate harm.
Okay. Okay, so, it's basically you're on track, given the push, you're closer on track.
Yeah.
And hopefully this doesn't happen anymore.
Yes.
Okay, thank you.
All right. Mike, can I go now?
Yeah, I don't know. I'm seeing a Zoom screen.
Yeah,
Mark,
I'm
you're
seeing- I'm seeing
Mark's
folks in the-
presenting his screen. I want to see if I can help. There we go.
Okay, that's better. Go, Mark.
Okay, you have on page 8, you have cash is secured through JP Morgan Chase and collateralized. I get a sense of what that may mean, but I'm not sure. JP Morgan gives you the cash?
You went?
The cash is secured. You mean you got it at JP Morgan and it's collateralized by, so it's not through JP Morgan.
So basically the portion that's not FDIC insured are collateralized by JP Morgan, but they're
Right.
under the authority's name.
Well,
And that's also further explained in our cash footnote.
I
as well.
assume that, but the language says it's secured through, and it's not quite
Okay.
there. And then there's the pension liability decreased due to a favorable valuation of pension plan assets. Last year was a disaster.
That was in fiscal year 21. We had actually a favorable pension plan asset. Sorry, my voice was giving. I sound like a frog. But in 22, it actually was not that favorable. So the 21 was, so if you look
21 was wonderful, but 22 was a bummer.
Correct, it was. And therefore we had the liability on 22.
I think it's not, you talk about 20 and 21, and you're not mentioning 22 as having taken all the profit out of 21 and then
Okay.
some. Then, let me find it. There is here an annual insurance premium of $179 million.
Which page are you looking at?
On page 28. That's a huge number.
Yeah, well, we have wrap-up insurance, so we cover all of the insurance for our contractors. We've actually done that since the beginning of the SCA. And it was, a decision that we look at every time we put the program out for bid. But the reason that we have historically done this is to ensure that all of our, because of the volume of work we do it to ensure that, to make sure that all of our contractors are in fact insured at all times. And it's to minimize our, our overall liabilities.
So you're building that in the cost of the construction.
It is. So we have a wrap up. Yes. So we have a wrap up, the city uses wrap up for some large projects. We use it across the board for all of our construction work.
Well, maybe other people are not astonished by it, but I wonder whether saying something else wouldn't raise as many eyebrows, but maybe everybody else understands it. So it stood out. I have nothing else, Mike.
Does anybody else have any comments or questions?
I have a comment, but then I suspect it may be irrelevant. Typically,
No,
when
go
I
ahead,
see
Wes.
construction, whenever I see documents from construction companies from construction related agencies. Typically there's something about obligations for ADA, and I didn't see anything in here, and I'm just wondering if is that outside the scope, or is that something that was never really considered?
I'm not understanding your question. Obligations for what?
For ADA, American Disabilities Act. I know the city always is in the midst of always some form of litigation regarding to ADA obligations for any type of construction, buildings, old or new.
So we, build that into our construction projects. So we're the construction arm of the DOE, right? So if there is a space that doesn't, where there's some lawsuit going on, that's the DOE is dealing with it. We are only dealing with it if there's an active construction project happening. So if there is a construction project underway that is just starting, we build it to code. When we're in a building, then we have to abide by all of the ADA laws and regulations, but we don't, the SCA would not be sued for ADA. It would be.
I'm not saying about litigation. I'm meaning that, let's say there's a settlement in 2 fiscal years prior. Do you account for the fact that when you're doing a new construction or remediating a building that you're going to increase your costs because you have to consider ADA obligations? Because ADA is a balancing test. So I'm just trying to figure out if you factor that in, or you just kind of overall it's just a wash and it's just all included in
it's all included in our numbers. It's all included in our numbers because all of our design documents would already have that in there.
Mm-hmm. So there's never a breakdown. Let's say if you find out you're putting more into your construction, you're increasing your costs due to these obligations.
No, but ADA isn't the only reason that our costs increase, right?
Oh, obviously.
Rules.
Yeah.
No, but I mean, I'm not talking about like market factors. I'm talking there's constantly new rules and regulations and codes that are being put into place that affect our costs.
Okay, yeah. I just curious.
Yeah.
I have a question about the management letter, but I'll just wait.
If there's no other questions about the financials, you could go, Wes, regarding the management letter.
Sure. There was something about cybersecurity, and I'm trying to find it. I just lost it, where it says something regarding to reviewing your contract with your cybersecurity insurance. Does anybody have anything about that?
Sorry, where are you?
Hold on, trying to find it. It's going between New York City School Construction Authority Management Letter Recommendations. I had it here a minute ago. I think it's page 5. And sorry for my voice. It's a little hoarse too. I guess Yawin is not the only one with a voice going in and out.
Yeah, that was a comment that we had in prior management letters for the SCA to consider cyber insurance, and they have obtained that. So that comment has been addressed.
Okay. And well, no, but it also says you have to review it. And I'm just curious, how is your review process going? Because I know that sometimes, well, actually, any insurance is always kind of very difficult to go against insurance company per se. Let's say you think it's working for your fiscal year, they say no, it's actually calendar year, or even certain requirements. Have you put that in place? And then they'll say like, well, since you haven't put those requirements in place, therefore we're not going to give you full coverage for ransomware attack. I mean, how have you guys implemented it? Has it been a top-down thing where you even train staff to adjust their behaviors in order to comply with insurance? So when attack inevitably happens, you're going to be covered. Just generally, because I've dealt with it and I find it very slightly annoying. But go on.
Well, I don't know if Warren, you want to answer this from the standpoint of your audit, but we have go through a process every year. I don't know, we go through a process every year where they, try to break into our systems. We also, go through the city's process that they do with everyone. And so the cyber insurance was recommended and we did it, but knock on wood, so far it's been working for us. I think that we've been doing the things that we need to do to, prevent for somebody falling for one of the cyber attacks. I don't know, Warren, if you want to respond.
Yeah, I mean, that's kind of standard language that we include. So if we have a comment that says, consider buying cyber insurance, the comment really is saying, well, make sure you're buying, make sure you understand what it is that you're buying, right? As opposed to, you can buy a cyber insurance policy that's very cheap, that doesn't cover anything. So that comment is really, just our indication to clients to make sure that they're familiar with the terms of what's actually being provided. So,
But it doesn't exactly reflect if any change has occurred on part of the organization, though.
Oh, may I just chime in here? Sorry. So every couple of years, the company will do a penetration testing internally here. And just to see and assess how the employees here responds to the penetration testing. Using those data, we will share those data with the insurance company. So every year, we actually go to the market and purchase the cyber insurance policy. And we will share that, okay, we've done this type of testing, we put in this type of controls, and therefore the firm has advanced certain security measures. Now, the cyber insurance is basically to cover us in case there's a ransomware attack as well, right? Yeah. So we also disclose our security measures within our company here. And therefore, it allows us to then, the insurance company and us would discuss how much liability will cover. And that's the process of every year. And so we actually do put some kind of controls in place with our IT department and with our insurance broker that assists us in the outreach for the insurance carriers. And with that, we then purchase the cyber insurance. We don't just go in and say, we like you and we would like to purchase for you this amount. We actually take into consideration the amount of coverage and also what kind of controls we have in place. And so does the carrier, because they have to, in order to quote us a reasonable price. So I hope that kind of answers and helps clarify your question.
Yeah, it clarifies partially, because it's so that you guys are actually reacting to your insurance and merely just not purchasing it. Because typically when the attack happens, if you're not doing certain requirements under the agreement, you won't be protected. And then there's just a loss of double loss, actually, the loss of not having protection from insurance and the actual hit from being victimized. I've dealt with that in the past. Mm-hmm. Okay, I mean, again, it was just a question. I just wanted to know for clarification, because it just seemed like an open-ended statement to look at your contract. Lawyers say that all the time, but clients don't always pay attention. And then lawyers get more money because we have to mitigate the risk of actually when the attack happens or harm occurs. Thank you.
I have gotten advice where I was the chairman of an audit committee once that said, don't discuss having the policy at all, because the bad guys check to see how much insurance you have when they hit you. And we were advised, therefore, try not to say anything.
I agree. The bad guys do look to see how much policy you have to request for ransomware. Yeah. And maybe a better way of stating it, if you want to avoid that type of public statement, you could just say that we're working on controls. And then obviously the response would be saying, who's actually implementing those controls? Have you gone down to not only the IT team, but training front-end staff who have access to computers? Who obviously going to have access to computers, but just that there is a response from the actual organization, because then that doesn't say anything regarding to money.
The problem you have in a public company, of course, is that if you get hit and you haven't disclosed the fact, if you don't disclose that you have the insurance, somebody asks you, why don't you have it? And then you're trapped.
Yeah, well, that's what New York City does. We trap people occasionally. We let them out from time to time.
Okay.
All right. If any other questions regarding the management letter?
No.
I'd like to thank you, Marion, and your staff and whoever else was here from SCA for coming, and be well, and we'll see you next year.
All right. Thank you very much.
Thanks. Next up on the agenda is the New York City Department of Education's management letter.
Here we go. Let's see.
Good morning, Chairman Mike. How are you?
Fine. First, you want to make any comments, Maria?
Yeah, good morning, all. Hello, Audit Committee. It's been a long time. Members of the Audit Committee, Mike, and Controller's Office. Time flies. Can't believe it's been about a year since we've met. We've made some progress in terms of our internal control findings. It's one of those things that we always say, it's like going to the doctor. You need to know what's wrong in order to fix it. I'm happy to report that some of these are one and done findings where we lived and learned, and we won't be repeating those mistakes. I'm also pleased to report that that we've made progress since our last meeting in terms of some of the security findings. We have representation here from our deputy CIO, also our operations team and our accounting team who could address your questions. So I thank you for the opportunity and welcome any questions.
Well, first, like Marla, is this Mike or who?
Yeah, this is me, Mike.
Do you have any comments regarding this letter?
Nothing in particular. I mean, it's laid out in the letter. I'm happy to run through the findings if you'd like, or if anyone had any specific questions, Maria and I can work to try to answer those questions. So however you want to do it.
No, it's like if you have no others, does any audit committee member have any questions or comments regarding the management letter?
There must be something magical about 2024 because everything goes until 2024. And given the sensitivity of some of these things, I don't understand what's taking so long to complete. I mean, for example, a product for monitoring separation of duties. That's not a Herculean task, and it's not going to happen until 2024. I mean, why are all these things being put off that long?
This is Desmond White. I can answer that. The reason that they're all tied to 2024 is because the same product is going to be configured to solve all those issues. They're all related to access to roles that folks have, the timely removal of roles, and the active monitoring of when roles change. And it may not seem like a Herculean task, but given the size, complexity, and the number of systems, and the number of different roles that people have in those systems, when you couple that with the transition of people in and out of positions, locations, in and out of the DOE, it is very, very, very complex. And that we have the product, we own the product. The 2024 date is to bring a vendor in to configure that product in a way that it does what it needs to do across all of the DOE systems.
Let me turn myself around and be a plaintiff's lawyer.
Sure.
If I saw something here that happened, and it's almost inevitable that something will happen, and I get a hold of the person on the stand and say, well, here's the problem, and it took you 2 years to get it done, you're going to be hard put to justify the length of time it took if some incident happens. That's a management decision, but it's
to clarify,
given the consequences of being wrong or not having it, it seems to be more resources would be justified.
To clarify, individual systems, as we've shown with Grant Thornton in terms of the review, individual systems are logged for any transactions or violations, et cetera. In order to proactively, manage those systems and monitor those systems efficiently, as per the recommendation from Grant Thornton, that's what the software is to do, to automate that. We have manual processes in place, individual systems are logged, right? So if we want to do this comprehensively, proactively, and get to a point where we monitor it and we're notified automatically, that's what the additional configuration of the system is meant to do. but there are individual monitoring. There is logging in place. We just don't meet the recommendation of proactively monitoring it and reviewing it. That's what the system is for.
Yeah, so
I hope that clarifies.
Just the general, in general, if anybody complains, symptoms.
Okay.
On the leases, there was one, like a question that seemed that where should it be valued at? The time of the implementation of the GASB or the historical cost?
Right, so under the GASB, the requirement was to record the value of the leases and the related liability as of the date of the implementation, so July 1st, 2021. And what happened was during the implementation, the date that was used was actually the beginning of each of the individual leases. So that was what that finding related to. And I believe the city is in the process of reviewing that for next year.
Okay. Because my record, yeah, like you would have gotten these numbers from the controller's office. You being DOE.
Yeah, DOE.
Mm-hmm.
That's correct.
Still remember some things.
Yeah.
All right. If there are any other issues or comments. Okay. Thanks, Maria and Mike, and Maria. We'll see you in the fall.
Yeah, it'll be like a blink.
Yeah.
So hope you have everyone has a healthy and happy summer then.
Yeah, same.
And Mike and team, see you in a couple of weeks, right?
Have a great day, folks.
Thank you. Thanks,
Okay.
everyone.
The next item is an issue that, like, we're going to move into executive session. So I'd like to have a motion to move into executive session.
So moved.
Thanks.
Second.
Okay, let me pause. We're good, Mike.
Okay, we're back in session. We concluded our executive session meeting. And like, it's not on the agenda, but I just want to highlight our next meeting is March 22nd.
March 22nd.
That's the tentative date.
And quickly looking all the items on the agenda.
I got it.
The former O&B. Plus, like the audit work plan, which will be an ES item. And the city's single audit, which will also be ES. So I just want to go over that and see if anybody may has any other issues or that should be brought to us for that meeting. Okay. I'd like to have a motion to adjourn.
So
Motion.
moved.
Second.
Then, Mike, when I get to you next, I'll tell you why I was interested